Hello, everybody. Welcome back to the channel. Today, I wanted to go over Tesla's earnings. I know I'm a little bit late on this. I do apologize. They did report Wednesday after the bell, so I'm a little bit late on this, guys. But somebody did comment in a previous video that they wanted me to go over this, so I wanted to take a deep dive into those earnings. So when we look at Tesla earnings, we can see that they actually did beat on earnings. So they did 1.05 versus a dollar per share. Now, something to keep in mind that this was adjusted downward, but a B is still a B. Now, if you guys paid attention on Wednesday and after hours, you can see that Tesla stock went down. The reason because of this is because they did miss on revenue. They did 21.45 billion versus 21.96 billion. So the revenue did go down. So that was a little bit of a concern that it did go down, but they still beat their earnings, which is, in my personal opinion, the most important thing, right? They barely missed on the revenue, but they really did beat their earnings. And that's what's the most important part because it's how much money are you earning per share? How profitable are you? And they can see that they're continuously getting profitable over and over and over again, and they're constantly becoming a more stable company, right? Even right here, when you look at Tesla's net income on a GAAP basis, they did $3.3 billion, which is very good compared to last year, $1.62 billion in the quarter from last year. So you can see that they almost double. They did double that up, right? Doing 3.3 billion compared to last year around this time of 1.62 billion. So they're constantly getting more profitable as time goes on. So that's a very good sign, and that's what we want to see in a company. One thing I always like to look at is how a company is growing its revenue over time. Is this company growing its business? Is it more in demand? And is it growing its profit, obviously? But is it even growing its business? And you can see from Tesla when looking at this chart, Tesla is doing a tremendous job of growing their business. They've been growing their business year over year. When we go back all the way down to 2018, you can see they're around $3 billion in revenue. But then when we get it to 2022, where we're currently at, what they just reported over $21 billion in revenue. So this company is doing a phenomenal job in growing their revenue. And that's something that we always want to take into account. Is this company growing their revenue? Because there's a good chance that if they're growing their revenue at a high rate, they're growing their profit at a very high rate. And that's what it comes down to is, are you growing your profit, right? We saw earlier that Tesla is growing their profit, right? Just this last quarter, they did $3.3 billion in profit compared to last year Q3 at 1.2, 1.6, I'm sorry. So they're growing their profit. That's what we want to see in a company to make sure that if it's a good buy or not. So Tesla's doing a tremendous job of doing that. Now, when we do a more deep dive into Tesla's earnings, we can really see how their company is growing over time. So when you look at Tesla in Q3 of 2021, which is last year, they did $12 billion in revenue. But as you can see, last year or this year, what they just reported, I'm sorry, they did $18.6 billion in revenue, which is a 55% increase over time. So they're doing a tremendous job in growing their business. Now, there are a little bit of concerns, right? So when we look at their gross margin is extremely important. It shows if they're controlling how much it costs for that product to be made. So the gross margin back in Q3 2021 was at 30%. Now that has dropped a bit to 27.9. Now we don't really like that, especially as companies scale and get bigger. You hope for their gross margin to go down over time, but theirs has gone up, right? They're getting less money per car that they're selling. But something to keep in mind is, guys, we are in a really big inflationary period where things are going up and the cost of goods has gone up. Even Elon Musk has even made a statement on this and how this is affecting their business. So it is something to keep in mind that the cost for making stuff has gone up. Inflation has hit Tesla as it has hit almost every other company around the globe. So that is kind of affecting their business. to where they're not making as much profit per car as they normally would, but they still are making profit. And you can see even right here, they did in Q3 2021, they got 3.6 billion in profit compared to the latest quarter at 5.2 in profit, which is a 42% increase. So this company is growing extremely fast, extremely well, in a big way. And that's all for just their automotive business, right? They got all the other businesses that they have, right? The biggest one is the automotive industry, but they also have their solar business as well, right? So they do get money off of that as well. So Tesla is growing in a very big way, which is a very good thing. And one thing I always like to look at when it comes to companies, if we go down to one of these last lines, is their free cash flow. So when we look at free cash flow, we can see that in Q3 2021, they did $1.3 billion in free cash flow. The latest quarter, they did 3.2, almost $3.3 billion in free cash flow, which is over doubling. This company is doing very well. Tesla is doing very well. They are growing their business. They are becoming more profitable. They're growing their free cash flow, which is a very good sign. When you have a company that has a free cash flow balance and growing over time, that shows you that the business is growing very well and that they have extra cash now to do whatever they need, whatever that be to grow their business, that be in a give out a dividend, that be to buy back shares, whatever the case may be. When a company has a positive free cash flow, that is a very good sign. That is something that you always want to look for. Does this company produce cash? Are they using shareholders' cash, shareholders' funds to grow their business, or are they using the actual cash that they produce to grow their business? And Tesla is doing that at a very, very big rate, very good rate. Look at their cash and cash equivalents. You got $16 billion in cash and cash equivalents back in Q3 of 2021 compared to 21 billion just reported. So Tesla is doing a phenomenal job, guys. I know they had a very big dip on that Wednesday and that in the after hours, and that Thursday they dropped by over 5%. But when it comes to a business that is growing their business well, that is growing their profit, growing their revenue, growing their free cash flow, doesn't really get better than Tesla. So Tesla is definitely a company that um, you should definitely a company to kind of keep on our watch list. Now, something to keep in mind is Tesla is expensive. Tesla is not a cheap company, right? So a lot of people expect greatness from Tesla. A lot of people expect greatness from Tesla, and because of that, it is not a cheap company by any means. I mean, when we look at their PE ratio, they're at a 66 PE ratio. The market average is around 24, I believe, right now. Don't quote me on that, but it's around 24. They're at a 66. So they're doing almost three times of what the market is doing when it comes to PE ratio. So Tesla, a very expensive company to own. It is not a cheap company to own, not even by most standards. It is a very expensive company to own. A lot of people expect great things to come from this company. So that is something to keep in mind. But when you see what they're doing and the moves that they're making, if they can execute at a high rate and they can execute, and they've been doing that, but if they can execute at a high rate and get there and get done what they needed to get done, you're looking at a company they can do a lot of great things. It's currently is doing great things, but it can even do even more things. I mean, when it comes to Tesla, you can never count it out. I've learned not to do that, right? They have been going down for the year. As you can see, year to date, they're down 39%. So they are cheaper than what they were previously last year, and they're growing their business, right? So you look at a company that's cheaper than what they were a year ago, but growing their business at a very high rate, right? We look at a 55% revenue increase. We look at a 42% profit increase. We look at a 30% cash and cash equivalent increase. We look at 148% free cash flow increase. All of these things are growing in the right direction, but their stock is down 40% year to date, right? So Tesla is a good company, very good company to own, but just something to keep in mind, guys, it is expensive. So when the market drops in a dramatic way, Tesla's going to drop usually more than the market because it is a very expensive company to own. Also, something to keep in mind is Twitter, right? So Elon Musk, as we a lot of us know, has been in a way forced to buy Twitter for $44 billion. Elon Musk is someone, well, most people don't have $44 billion in cash just sitting around. So when it comes to this $44 billion, he's going to have to fund that deal some way. One of the biggest ways that he's most likely going to do it is going to be by selling some of his Tesla shares, as he is the largest individual Tesla shareholder. So the hard times for Tesla are not over yet. I believe this company is going to drop even more over time, and I believe it's going to drop even more than maybe even the market's going to drop by a little bit of an extra margin. But if you can pick this company up at the right price that you feel comfortable at, because keep it in mind, like I said, Tesla is a very expensive company. You're looking at a company that can do a lot of good things, right? You're looking at a company that can grow in a lot of big ways. So it is something to keep in mind, something to look after for, um, something to kind of keep on your watch list and keep your caution with, guys. But thank you for watching the video. If you guys can like, comment, and subscribe, I'll really appreciate it. Thank you for checking out the video. Bye bye.